And good evening, everybody. This is Michael Filighera. I am with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott Wave update for the S&P 500 for Sunday, July 18th, 2021. I'm changing the format for the Sunday updates. And this is where my updates will be longer, up to maybe 30 minutes or so. And that will only be because we are updating the longer term count, the implications of any changes in the longer term count, a continued educational process where I'll be going over the Fibonacci, going over the using either extensions or using Fibonacci retracements, going over the time frames, going over different factors that go into your analysis on your biggest picture, and then how that building block process works in reverse as you build your count. And now you're carrying it forward through all of the momentum and all of the waves that have to be put into place to finish your next larger cycle. That is what I did. And then on last Thursday's update, I began to allude to the fact that I had upped all of the counts by a degree. So the count that I'm using in the S&P and the count that I'm using in the NASDAQ, I took them up a whole degree. And so instead of finishing what we were thinking we're going to be finishing minor waves, turning into intermediate waves, and intermediate waves are possibly coming as high as a primary level. Now here in the S&P, I'm going to go all the way back out to my monthly maximum chart that I have. We're in a cycle wave, fifth wave, a cycle 5 on the way up. And what we have already completed, and this came via the Dow. I was doing some work on the cash Dow market, which, by the way, is included within that work that we're doing is included within my ebook that I'm publishing, and is titled "You Are Your Own Guru." And within that, we're going through identifying waves, and this is all offered for free. If you're not on my mailing list, if you're not subscribed to these channels, please subscribe to one of the other 2 channels that I post on, and you will automatically receive the link and the coupon code to get that first 4 lectures of the book free. So within that, I go through much of the detailing on the structures. And right now I am writing about the terminologies and how that works out. So cycle degree, still we're in, the trend is up, impulse waves are up. So the 5 waves we're looking for in the cycle, 5 waves up a primary degree, because that's what's going to be needed to finish cycle wave 5. And so within that, we have primary 1, primary 2, primary 3, and primary 4 already complete. So what we are in is a primary 5th wave, which started off of the lows from the first pandemic run lower. So that low back in March of 2020 is where primary wave 5 has begun. Remember, in the cycle wave 5, we need 5 waves of primary degree, and we're in that 5th now. So within the primary level, we're going to have 5 waves of intermediate degree, and within that, we have finished wave 1, 2, 3, and we're in 4. We are in an intermediate 4th wave. Now, what I've already included on our chart are the Fibonacci retracements for a 4th wave based on an intermediate 4th wave, I should say, based on where intermediate 3 began. So it's the low of wave 2 to the high of wave 3. That gives us our retracements of what we can expect for 4th wave. Well, we can see that the first one is at 4,104. That's a 0.236. The next one is at a 0.382, which is at 3,931. 3,931. That would be quite the drop, since we're still trading above, just above 4,300. What I think would be more realistic is that 0.236. And let me take this now down to a 4-hour chart where we can see in the 4-hour chart, that is the whole third wave. And I've added these based on this longer term, but I can add some additional because in all fairness, this is the area that I'm looking for it to come back to, because a intermediate fourth wave correction should find support within the price territory of the fourth wave of one lesser degree, and that's the minor. Okay, so that's the total potential. So the total potential is ending up to be between this and this, because that's 382. But now we can narrow that down because the whole range for the minor wave 4 was from 4,232, we'll call it, down to 3,000, or excuse me, 4,029. So in essence, we would have about a 384 point drop. We may lose 338 pounds, and collectively, just in sweat. In any case, we run the potential that we could drop quite a bit further. Now, I'm also would think that we have this additional support within the fourth wave. Again, that's one additional level down because it's the minute level. But we know from running it all the way to the up to the intermediate level that we're going to come down to the fourth. But if I was just inside that intermediate level, because it's an intermediate 4, then it's going to be here, potentially as far as here. So we still can run down to 4,104, but we can up that top level to 4,252. Now we're into the realm of reality. Plus, we still have the 200-day moving average at 4,279. So we do have support coming down. Now I can break this down even further, but again, I think that depends on what I'm going to be counting next. So if I'm going to open this up, then I'm going to start looking at what's that structure coming off. That's going to be where the most important thing is going to be. So right now, we might have A, B, 1, 2, 3, 4. This is 5. Very, very sloppy, does not fit. A, B. So that's B. Now I'm doing a C wave. And it's 1, 2, and this is wave 3. That fits cleaner, allows for additional upside, allows for additional downside, gets us first into this area of support, down to 4,274. Ultimately, again, that was that other 4, if we go up. Ultimately, though, here's where we sit, 4126 into this zone. That's what I'm looking for. And ultimately, as I said before, let me go back out to that 4-hour, we can come all the way back into this. So we could drop even further, but I would not think we're going to get too much further below that. In fact, we had at the time a lot of support around 4,051 would come in there. I mean, it still could come in even shorter. It could finish up right here, do a 3 and a 4 and a 5, and maybe even get a little bit further deeper into this zone. This one is optimal. This one is very acceptable. It's all dependent on the count, because the count is what's going to be more important. It's going to tell us when the completion of that ABC fourth wave is going to happen. Remember, in learning Elliott wave, corrective waves, counter trend, right? Trend still up, so this is a counter trend down move. It's going to be an A, a B, and a C. And C waves are always 5. So going back down to that hourly chart, A, B, C wave subdivides 1, 2, 3, 4, 5. We did get a 5 down, and it did start up. And if you remember, I believe on Thursday, I was talking about that. And I said, if we start to go further up and then drop, then this is just the beginning of the C wave. But if it ends there and we start rallying and we get up back towards the high, then we'll consider that an ABC complete, coming in extremely shallow. That's another important factor. And that would just undermine or underlie this intense buying pressure that was now being exerted up. Didn't get very far. Got up to 43.68, got within 20 points of that high. So, the buying was kind of intense, but it really ended up being for expiration. And when that failed, the sellers came in just prior to expiration and started to really just take it lower. So 1, 2, 3, 4, 5. And that's just saying, I'm not even saying that wave 3 is over yet. We'll know. We'll get a fourth wave bounce, which in turn will be an ABC. ABC. Just like this, but in the opposite direction. C waves are always 5, even on the itty bitty tiny, because don't forget this is an Elliott chart. I take this down to a 1, a 2, and a 3, or a 5, and you're going to see that 5 wave C within. If you're getting a little ABC on the hourly, you're going to be able to go down on those lower time frames and see the A, the B, and the 5 wave C. This is the beauty of Elliott, the building blocks, and we can take it all the way down to that bottom level. So when you're trading intraday, at least now you have an idea. This is what is forming. This is what we should form. And this is the structure that it should produce. That's tradable. That's tradable information. You know it's going to be an ABC. You know that the A wave and the A wave can form just a 3 wave up or 3 wave up in this case. And then the B wave would be a 3 wave structure, but the C's are always going to be 5. Always. So if you're able to count that 5 up, and plus you've counted an A and a B, you can be fairly certain that's going to be a point where you should start to, the market's going to tell you when it's ready to go down and starts breaking below certain levels that it shouldn't, then you're going to know it's an ABC, it's done, and we're going down. And you can start to expect those larger moves on coming off. Okay, this is another reason why I want to use this hour, or this update, excuse me, not this hour, this update, so that I can start to put forth some more of the trading instincts or the trading power that you're going to have when you are counting correctly and you're coming in normal areas where markets should, in a corrective phase, be complete. Now, we've already laid out some bottom lines, but here we are internally. So I would come down again and go to the 15-minute. Now you can start to see the internals. So it's a 1, and so this is 1, 2, and now we're in 3, and it's 1, 2. This thing is subdividing all the way down, and then the 3 subdivides. These are the beauty of Elliott wave, because we know we're in the 3 of the 3. This is what this is. Here's wave 3 starts here. This is 3 of 3. Look at how it accelerated. And then look at how the overall 3 then accelerated. So you're getting more information here, and it's tradable information. I mean, if this was during our session and we were trading it, you start to play it from the short side. Your moving averages are telling you. This is a 15-minute chart. Everything is lined up. And we're going to continue to go down. You continue to move this down. What does it tell you? So here's the trick, kids. You keep your cool. You keep your focus. You keep focused. And don't get freaked out by what's happening. Follow your moving averages. Let them tell you. Recognize that, okay, we could flip and we could go higher. Your moving averages are going to confirm it on a 5-minute basis, on a 2-minute basis, and on a 1-minute basis. If you're trading primarily off your 1-minute chart, then when you're looking at that and the moving averages flip and go above that 4, look at your 2-minute. How far away is the 4 on that one? Because that's likely the next target. And then if it breaks above the 4 on the 2-minute, then where is it on the 1-minute? It's likely around the 8. Well, if it breaks far enough above the 8 on the 1-minute, it's heading to the 8 on the 2-minute. Now you look over at your 5. What is it doing there? This is what we talk about in the trade room. This is part of what I love to teach. These are usable tools, and all that really has to happen is remaining focused, remaining in tune what your charts are telling you. And when you can do that, and you can stay calm, and you're just in the flow, these are the times when they become more usable. When it's choppy in here, it's much harder. Here, it's much clearer. We are in the 3/3. Likely this will end sometime here in Globex, folks. We still have Asian markets just opening. We've got Europe that's going to open in about 4 hours. Then we've got the US, which opens approximately about 6 hours later. So a lot can happen in the next string of time. We've got another 13 hours and 20 minutes before we open here in the United States. You can go in and trade this, but then we have all of our information. So a lot can happen. If we get into that fourth wave, again, follow your moving averages. You know that the fourth wave is going to be an A, a B, and a C. And within that wave A, it has two possibilities. It's either going to be its own series of 3, or it's going to be a 5 wave. And learning Elliott and learning how this all functions, there are just definitive things that I'm now putting together and writing about how you can identify fairly quickly whether it's going to be a flat or a zigzag ABC. And those are important information, because when you can discern that, now you're adding more trading points. If you're figuring that you're going to get a particular structure, now you know entry and exits. If you don't get that structure, you got an exit point coming. But you can get back in the groove. So it's being able to stay open to all of these factors that happen every single day, all day when we're trading, because the market is fluid. And as long as you have fluidity, you should be trading, not getting caught up in trading against the market, but trading with the market, and understanding that it's going to move quicker than a lot of us would really want to, but you have exit points. You have to have exit points. If you're getting into a trade because your 1 minute is crossed above the 4 and it's moving now nicely above the 4, then I would pull back, and then I'd be looking over at my 2 minute going, like, it's going to likely get to that 4. But if it doesn't, where's my break point? If I'm buying it as it crosses or stays above the 1 minute 4, I may take a shot, I'll buy it. But what's my exit? My exit if it drops too far below that 4, the 1 minute 4. So you got your stops, you've got everything in place. And now we just need to use it. That's where I'm going to leave this tonight, folks. A lot of education I just gave. I hope everybody gets a lot out of this, because this is important, and this is my main factor. I want to teach. I like teaching. I like showing people. So I'm going to be offering some things out here once I start getting that book a little bit more published. Right now, make sure you get on the list. Make sure you subscribe, because then you will get notification of the video that will contain the link and the coupon code to get those first 4 lectures or chapters from the new ebook, You Are Your Own Book. Thank you, and I'll talk to you guys tomorrow. Next lecture will be on Monday the 19th.